Hi guys, welcome to AdStan Economics. This is a podcast that myself and Adam are going to be setting up, speaking about the economics curriculum that we're studying and the markets at the moment. So do you want to kick it off?
Yes, my name's Adam. I'm at sixth form with Stan and I study maths, history, further maths and economics. I share a great passion for economics and together me and Stan basically want to show you guys what we know.
Yeah, I'm Stan. I study maths, economics and drama. Should we just go straight into it? So the global market at the moment, the S&P 500 has reached an all-time high of $5,100. And do you know any more figures about that?
Yeah, well, it's up 60% in the last 15 years. So if you had bought shares in the S&P 15 years ago, in real terms, that would have made you $430 should you have invested $100. So in real terms, it's up 430%, which is just nuts.
430%. I mean, yeah, that's significant. And one of the reasons that this is obviously because of Nvidia. The AI chip makers, they are a market leader, and they're up 450% since 2023.
Yeah, it's ridiculous. I mean, they reported their earnings at the start of this year, Q1, and they were up 2 billion from what they were expected to be. So they were 22 billion, they were expected to be 20 billion.
Wow.
At the start of last year, what were they?
6 billion. So going from 6 billion to 22 billion in one quarter is,
yeah, in 1 year,
it's ridiculous.
That is insane growth for a company. And why is this? Why are Nvidia doing so well?
Well, it's because they have the best chips, the best network, and the best software. And of course, if you combine them all in one, this is going to make a market leader, and this is why they have a 95% market share, which is of course a huge monopoly.
Yeah, so in the chip market, they're obviously a massive monopoly because they just dominate all aspects of it. But they didn't always used to specialise in AI chips, did they? What did they used to do?
They used to do GPUs for gaming PCs. I actually have one of their cards in my PC, so I can say that I am involved in Nvidia.
That is pretty cool. I mean, they really spotted a gap in the market there to begin producing for AI, and with this AI boom, it's really helped them out, and it's one of the reasons why they're doing so well. But do you think that AI boom and this AI hype is going to continue in the next few years?
It's a hard one to say. Who's to say? I mean, not even Warren Buffett can predict that. But yeah, I think they will, because of course, recently I read an article about the Meta group, so Facebook and WhatsApp and Instagram and all of those social media platforms. They're creating a new AI called Llama 3, I think, and this is using like 24,000 GPUs strapped together. So of course, that's a lot.
Speaking of Meta, actually, they've been down recently because of Donald Trump's policies on TikTok. So if he were to become president, then he basically wants to ban TikTok, and therefore Meta's been down in the market. And actually recently, in the last week or so, Nvidia has been a very volatile stock. So is it overvalued or who knows?
It's hard to say. But obviously the CUDA is an innovating network, and this is of course contributes massively to Nvidia.
Yeah, so Nvidia, one of the reasons for the S&P being up recently. But the Federal Reserve had said that the golden age of the markets is coming to a close. Now, that is a big statement.
Yeah.
Now, what do you think some of the reasons for that are? Why might the S&P drop, or not necessarily drop? Because what did Goldman Sachs predict?
Goldman Sachs predicted that the S&P 500 would be at $5,200 by the end of the year.
So yeah, it's still growth, but at a slower rate. Why might that be?
Markets are slowing due to corporation tax, higher interest rates, the trade war between the US and China. Do you want to speak about that?
Yeah, so the trade war, the potential prospect of Trump coming in at the end of the year especially adds to this.
Yeah.
I mean, already the US and China are increasing tariffs on each other's exports and imports, and that discourages trade, which from a firm perspective, it's going to cost more to import and export, and therefore your cost of production are going to be greater, and therefore you're not going to make as much profit, which from the perspective of the stockholder, shareholder, your returns aren't going to be as great because of lower profits. And then touching back on Trump, if he comes in, he's going to tighten these policies even further. So yeah, this trade war is significant. I mean,
it's not good.
What happens to China's GDP as a result of it initially?
I think it's down 1%.
Yeah, it was down 1% last year.
Yeah.
I'm pretty sure you told me that. I mean,
yeah, and another thing linking to this decreasing returns of stockholders is of course higher interest rates. Interest rates right now in the UK, the base rate is 5.25%, which a lot of people consider to be quite high. But however, if you look back in the past, interest rates have been higher. However, there's been a lot of talk, especially in America, about the Federal Reserve cutting interest rates. But they've been saying this for a year or so now.
It's been going on for ages. Maybe finally, now inflation's finally lowering, they will cut them, but who knows? But yeah, as you said, interest rates aren't that high at the moment compared to in the past, way before. But in our lifetime, they've been at nearly zero almost the whole time. Now, what does really, really low interest rates do, and why has that meant that the S&P has been able to grow so much?
Well, it's kind of the concept of free money. You know, if the interest rates are a lot lower, the cost of borrowing is a lot lower, so people can invest a lot more and not have to pay back as much money. And this is, of course, massive for firms, because when they want to take out big loans from banks to, I don't know, invest in capital or stuff like that, it's a lot cheaper for them. But obviously at 5.25% or whatever it may be from the bank they're borrowing, it's not going to be as profitable, which is of course massive for firms. And if firms aren't making as much profit, shareholders are not making as much profit.
Yeah, and also because of inflation. I mean, if there's inflation, shareholders' real returns are going to be lower. Yeah. Also for the consumers, well, if interest rates are lower, then it's going to be easier to consume because, like you said, you're going to borrow less and there's less of an incentive to save. So recently, with the increase in interest rates due to inflation, there is a bit of a lag time, but within that lag time, that's going to cause the S&P to drop a bit. And what about globalization and the free market? What do you think? How do you think that might impact the S&P and market returns?
I think that because of the trade war between the US and China, this is obviously going to decrease globalization because they're not going to have the best relationship. That China are going to make it harder for the US to produce things out there, vice versa. So this is obviously going to decrease globalization a lot. And also consumers aren't as happy with the quality of items nowadays because a lot of it's being produced in big manufacturing countries like China. And so, of course, the quality of stuff is going to be as good.
She remembered some cases where inside their clothes it's saying things like "help me," like really there's a lot of pressure on producers to stop the globalization, and therefore the free market, like this decrease in low cost of production and capitalism because of pressure being applied by households and consumers. So who knows what's going to happen there, but that obviously decreases overall profits and therefore returns.
And I also want to touch on some commodities. So uranium, you obviously need uranium to make an isotope for nuclear bombs and reactors. Yellowcake are a firm whose revenue is up 160% in the last 5 years, which is obviously significant. Can you tell me about the demand side of it?
So in terms of uranium, obviously with the 24 COP, where did they meet in Paris? What was that called again? COP24, there we go.
Oh, that's it.
A lot of governments were pushing towards net zero targets by 2050. And well, if we use unclean energy, so coal, oil, exactly, so CO2 producers, greenhouse gas emitters, then we're not going to meet them goals. So nuclear energy is really vital for doing that. And that's why China is building 150 reactors, and
which is, that's a significant number. If you look at the US, I think, what do they plan to make? 8 or 10 reactors by the end of the next decade. I mean, China's clearly ahead of the field there.
Yeah, so going back to demand, that means that demand for the uranium in the next 20 years or so is going to be continuously higher. And therefore, if we think about our demand graph, then that's just going to shift out and the price will therefore increase. Simultaneously, there's actually been some supply side shocks regarding uranium, which have also increased the price. So can you tell me a little bit about that?
There was a Nigerian coup where Nigerian workers were just refusing to work, which is obviously going to decrease the supply of uranium. However, Nigeria, what's their economy at for uranium?
I think they're the 7th largest uranium producer, so the impact's big, but not as big as it would have been if it was another country.
Also, there have been sanctions imposed on Rosatom, which is a Russian firm who look after uranium, and this is obviously going to affect the supply as well, making the demand higher.
Yeah, so that's largely due to speculation still about the Russia-Ukraine war. Should Russian firms be allowed to produce uranium, etc.? And like Stan said, the supply is therefore going to shift inwards, and if we've got an increase in demand, then the price is just going to soar. So can you tell me about the uranium price recently?
In the last 16 years, I think it was at $30 a pound 16 years ago, and it's now at over somewhere in the ballpark of $100 a pound, which is, it's a recent peak. And this obviously just shows the demand for uranium, because of course so many of these countries, they want to start building more and more reactors because of pressure of the public and stuff. And
I read something about that. Highest in 16 years, I think it was, and increased by $70 per pound in the last two or 3 years. However, the uranium market is very volatile, so whilst for investors who might be looking to buy uranium commodities, that this could be beneficial right now because the price has increased. In the long term, because uranium is volatile as a result of oil and attitudes towards oil and oil supply changing, it is quite risky still. So who knows really what will happen with that.
Also with renewable energy sources like solar panels, wind power, those are going to be growing and growing more and more. So eventually, we won't be seeing as much of nuclear energy, but that's far in the future.
Western economies, that's why you said, yes, the US are building 8, but that's considerably less than China because they're focusing on other types of renewable energy. Obviously, uranium doesn't produce greenhouse gas emissions, but it's got larger negative impacts than these other cleaner renewable energies. So to wrap up today, in our first episode, we looked at the S&P, we looked at Nvidia,
and we also looked at uranium and commodities. So we hope you enjoyed, guys, and we're going to be making more of these episodes. So we'd love to hear your feedback, and
thank you very much for listening. Hopefully in a month or so we can come back and recap the markets again. It will be interesting to see what happens to Nvidia, the S&P and uranium.
We'll see whose portfolio is up the most.
Exactly. Anyway, cheers guys.